How to know what your business is actually worth. This isn't just about bragging rights. Knowing your business's value is crucial for a whole host of reasons. Have you ever thought of selling your business? Looking to merge with another business? In both cases, valuation is an essential part of the process. Even if you're simply planning for the future, understanding your company's worth is like having a financial roadmap. Think of it this way: your business is an asset, just like a prized possession. But unlike that vintage car in your garage, your business is dynamic. Its value can fluctuate based on a number of factors, from market trends to your company's own performance. Having a handle on this value empowers you to make informed decisions. You'll be equipped to negotiate deals, secure funding, and ultimately drive your business towards greater success. There are 3 valuation methods that you really need to know about: asset-based valuation, earnings-based valuation, and market-based valuation. Let's start with the asset-based approach. This method determines your business's net worth. Take stock of everything your business owns and subtract any debts. The result? Your net asset value. It's like selling all assets and paying off debts today. This includes tangible assets like equipment and real estate, and intangible assets like patents and trademarks. Remember, this method is a snapshot in time. It doesn't reflect future earning potential. Next up, we have the earnings value approach. This method shifts the focus from what your business owns to what it earns. It's all about assessing your business's ability to generate profits, both now and in the future. Instead of simply looking at your balance sheet, this approach delves into your income statement and cash flow statements. One commonly used metric in this approach is EBITDA, which stands for earnings before interest, taxes, depreciation, and amortization. EBITDA provides a clear picture of your company's core operating profitability, excluding factors that can sometimes muddy the waters. By analyzing your historical earnings and projecting future performance, you can estimate your business's future cash flow. Let's take a bakery as an example. The earnings value approach would consider factors like your average sales per day, your cost of goods sold, flour, sugar, etc., and your operating expenses, rent, utilities, staff salaries. By analyzing these figures, you can estimate your bakery's profitability. This method is particularly useful for businesses with strong earnings and a track record of consistent performance, as it provides a more forward-looking perspective. Next on the list is market value approach. Finally, we have the market value approach. This method takes a wisdom of the free market, looking at how similar businesses are valued in the marketplace. It's like checking the real estate listings to see what houses are selling for in your neighborhood. By comparing your business to comparable companies that have recently been sold or are publicly traded, you can get a sense of its market value. This approach relies on finding businesses with similar characteristics to yours. Size, industry, financial performance, and growth potential. It's like finding your business's doppelganger in the market. Of course, no 2 businesses are exactly alike, so adjustments are often made to account for any differences. For our bakery, we might look at recent sales of other bakeries in its area or compare it to publicly traded bakery chains. This method can be particularly helpful for businesses in well-established industries with readily available data on comparable companies. However, it's important to note that market conditions can fluctuate, impacting valuations. Factors that can make or break your valuation. Now that we've covered the main valuation methods, let's talk about some key factors that can influence your business's worth. Think of these as the X factors that can either boost or drag down your valuation. First and foremost, industry trends play a significant role. Is your industry experiencing a surge in demand or facing headwinds? Next, market demand for your products or services is crucial. Are you riding a wave of popularity, or are you facing stiff competition? Your company's growth potential is also key. And are you a startup with explosive growth prospects or a mature company with steady but predictable growth? And let's not forget about financial performance. Are you consistently profitable, or are your earnings erratic? Do you have a solid track record of managing debt? These factors all contribute to painting a complete picture of your business's financial health and ultimately its value. Steps in your business valuation journey. Now let's walk through the steps involved in conducting a business valuation. First and foremost, you'll need to gather your financial data. This includes your balance sheets, income statements, cash flow statements, and any other relevant financial documents. Think of this step as laying the foundation for your valuation. Next, you'll need to choose the valuation method that best suits your business and your objectives. Are you looking for a quick snapshot of your net worth or a more comprehensive analysis of your earning potential? The method you choose will depend on your specific circumstances. Once you've chosen your method, it's time to roll up your sleeves and start analyzing your financial data. This involves calculating your assets and liabilities, projecting future earnings, and comparing your business to comparable companies. Finally, it's essential to review your results and make adjustments as needed. In the end, understanding your business's value is essential as it allows you to deeply understand the health of your business. It equips you to make strategic decisions, negotiate from a position of strength, and ultimately drive your business forward. Whether you're planning for the future, seeking funding, or considering a sale or merger, knowing your business's worth is the first step. While we've covered the basics of business valuation, keep in mind that it can be a complex process. There are nuances and intricacies that require a deep understanding of financial principles and market dynamics. If you're looking for a comprehensive and accurate valuation, it's always wise to consult with a qualified professional. Think of it as seeking expert advice before making a major life decision. A professional business valuation can provide you with the insights and confidence you need to navigate the exciting world of business ownership. If you want to get started on knowing what your business is worth, use our free business valuation tool today and get started.